This is the weekly review for the week of September 26th to September 30th, as well as this week's Sunday preparation. So, coming into the week, I wasn't really too sure on the bias. I said that I was looking for a bearish bias, and for this swing low on Friday, for this low on Friday to form a swing low on the daily chart and potentially retrace up and then continue lower. But the week turned out to be a bullish week with us trading lower off the weekly opening price. And then we rated previous week's low with a SMT, had clear displacement away from it, and then returned back into discount of this displacement leg into a fair value gap, and ended up trading higher to close off the week with the high of the week on a Friday. So on Monday, so this week I really just stayed on demo. So we opened the week with a really large move down here. So I was really looking for the sell stops above the high here to be targeted on Monday, because I felt that retail traders who saw this would have been trying to chase the short price action, and this was the high prior to this move down. So on Monday I was looking at this long. We rated the London low with SMT, and I was waiting for a M5 break in market structure to return back to this fair value gap here. But we never got the M5 break in market structure. It was only a M3 break in market structure, and we returned back to that fair value gap in discount, and that would have been a nice trade, but I was really just watching the M5 here, so I didn't get a trade. Then I saw this institutional order flow entry drill here. I got in on this on demo, and I got tagged out before it hit take profit. And again, all my take profits are just at the 1.3 R using the ENS model. But I was looking for, obviously, this liquidity to be taken and that high up here to be taken. That's what I was seeing as the draw on liquidity. But again, I just want to take my profits here early so I can actually be in profit. So yeah, this ended up getting stopped out, but it hit TP. And we had a bearish SMT here with London high, then broke market structure down here. And we had a bearish setup form that I noted. I was away from the charts here, but this was London close session. And this was definitely a nice short trade here, because given this SMT and the time of day, and also this bearish displacement, it's highly unlikely that at 11, 10, 11:20, we're going to rally up and create a new high of the day and take out London high, especially after we had a SMT and then this displacement down. So that was the logic for this trade, and I noted that in my journal. And overall, this was just a consolidation day, and I noted also that I was anticipating this to be a consolidation day, given that we had this big move down on a Sunday. So on Tuesday, I still wasn't very clear on the bias. I ended up looking at shorts just because we had this SMT with the interim session high, and then we had this big displacement down here. And on this demo trade, I wasn't really paying attention because I shorted at this fair value gap here, but this fair value gap was not in premium. and that's why I got stopped out here. So from this displacement range here, there really was no trade here in terms of a fair value gap entry. It did come up and hit the order block, but I don't trade order blocks. So this fair value gap entry would not have been valid because, again, it's in discount when we want to short in premium. But then a second opportunity came, which I took after this displacement down here. Came back up into this fair value gap in premium of the displacement range here, and ended up taking profits at the 1.3R. So yeah, still didn't really know the bias. And coming into Wednesday I didn't end up touching EU at all because we had that news come out from the Bank of England, and the pound price action was even worse than EU. So right, I saw this on GPB and to a lesser extent on EU here with this wick. So I saw that and I just immediately focused my attention primarily on S&P because obviously ICT has always been saying not to trade currencies because they're super sloppy, and when we had that price move out of nowhere, yeah, I just didn't end up looking at EU. But this is where we ended up forming the low of the week. We took the previous week's low, obviously, with SMT, and then we had this displacement up here, and on the M15 it's much easier to see. Now, even though the logic of this was very nice, the entry really wasn't that great, or at least the PA for the entry. I don't think I would have really, seeing this live, I definitely wouldn't have considered this swing high a break in market structure. I would have much rather have seen this as a break in market structure, and we didn't get a closure. But the rest of it followed the logic with price returning into discount, into the fair value gap here and order block, and then trading away from it. Then, oh yeah, I also noted this DXY SMT because yeah, I didn't really get the narrative live that we had this previous week low raid. And then this was the institutional order flow entry drill here in New York session from this range down here into the M15 fair value gap after we had a H1 break in market structure here. So coming into Thursday, oh, and also the second or the third part of this long logic, apart from rating previous week's low with SMT, it's also the fact that it's September 28th, so this has been the low of the month. So just based on the monthly Power 3, we only have 3 days left in the month. So we should be anticipating a retracement back into the monthly range. And especially because this is now a Wednesday, right? So we're kind of like blending all of these concepts together. Where Wednesday formed the low of the week SMT with a raid. So that's a high probability that the week is going to be bullish, coupled with the fact that the low of the month, or it's September 28th, and we formed the low of the month here on a Wednesday, rating previous week's low with SMT. So it's going to be highly likely we're going to retrace into the previous, into the monthly range. So that's why on now Thursday I was looking at longs, and I took this on demo. I took this institutional order flow entry drill because Thursday was a classic buy day. We had the low of the day form in London, again inside this fair value gap here. It was a multiple time frame fair value gap, M15 all the way up to H4, and this is in discount of the previous day's range. So I saw that, and then I saw this expansion away from it. So I said, all right, this is going to be a classic buy day on EU. So I was anticipating the lower high of the day to form during New York, and I had this price swing marked out here because we had this little brief consolidation, and I marked it up to the high and got in on this M15 fair value gap in discount, and price ended up stopping me out here and then going to TP. Not really sure what this is about, just that maybe price was sloppy because everything was in line for this. So yeah, I'm not really sure what happened here. And then I took another demo short that ended up playing out, but the bias was incorrect. Here I was looking at a daily power 3. Because we took previous day's high with a SMT, and the time of day was 10 a.m. And then I saw this big displacement down on the low time frame. Got in here as a demo short and just obviously taking profits at 1.3R. Just hit my TP here and then immediately reversed. So this was really just a lucky trade. Even though this looks nice on the low time frame in terms of the displacement coupled with the RAID and SMT, this was against the weekly bias. And also I just noticed it being 10 a.m. That's actually still rather early for a power 3 trade, especially when the day is bullish. I think it would have made more sense if this was 11 a.m. So I think this win here was just kind of lucky. And this loss here was unlucky. It's funny how that works. Trading with the bias, I get stopped out and then hit TP, and then trading against the bias, I just hit TP, and then it would have, or then hit the would-be stop loss. But yeah, and then Friday I was looking for bearishness because we formed the high of the week, or I was anticipating the high of the week to form on Friday. And we did. We got a previous day high raid here. There was no SMT here, so even if I was up in London, I wouldn't have taken this trade. And also the displacement here was not really the cleanest or the most compelling displacement, rather. But yeah, we did have a setup here, break in market structure, return to fair value gap, and traded down. And then I was looking for potentially New York to form a setup here in premium inside the fair value gap here, but we did not end up getting that. We ended up having a long opportunity here, but there was no significant liquidity rated, so that's why I didn't take part in this. But we still had this setup here. SMT, break in market structure, return to the fair value gap in discount, and then trade higher. So yeah, overall, EU was a little bit sloppy this week for me in terms of low time frame trades. The weekly candle was really nice, though. But one of the things that I noted was that, because I'm also looking at S&P now after finishing the N series, and I'm just looking for those ends trades in S&P, and we kind of broke correlation where EU had that retracement here on Thursday and then went higher into the fair value gap, and I came into the S&P on Thursday with that same bias. I was like, are we going to be bullish? And that's kind of one of the things that threw me off, was that we completed this market maker sell model market maker buy model on S&P with these equal highs being rated. So that was bearish. But at the same time, I was looking at the monthly PO3 and the fact that EU also had this bullishness. And I thought that we were going to come in here into this fair value gap and go higher. But yeah. So for next week, I'm looking at this range here from this high to this low, and we're in premium of it. And there's a weekly fair value gap here. There's also a daily fair value gap right in here. And then there's also a weekly order block. Right there. So what makes the most, and we also have that, obviously, the SMT here. So what makes the most sense to me, or what looks the most probable to happen, is that we're just going to trade up in here and then fall off. And that also couples with the seasonal tendency of the dollar index. So in October here, which we're starting, the seasonal tendency is for dollars to decline up until around the mid of October and then rally up. So that is in line with this bias here, where we can trade up into here up until the middle of October and then trade down. And then the same thing with the dollar index, where we have this weekly fair value gap down here, the weekly order block here. I did note these equal lows, but I don't think that we're going to come all the way down here and tag them, because the higher time frame is still bullish. So I expect these PD arrays on the dollar index to be respected and eventually trade higher. So that's what I'm looking at EU. For S&P, S&P is a little interesting because we again have this weekly fair value gap here, but we're relatively close to this weekly order block and weekly fair value gap on the downside right here. So it also makes sense for indices to come down here and then return to the weekly fair value gap. And that would also put the weekly fair value gap in premium of the potential range that forms, because right now, if we were to form a swing low here, that weekly fair value gap wouldn't be in premium. But if we start to dig into this weekly order block, if we start to dig into this weekly order block and form a swing low here, then this weekly fair value gap would be in premium. So it's a little bit confusing for me, honestly, because I could see both things happening. So really, I'm just going to wait for this weekly opening to occur and Monday price action. And then we also have this monthly order block in the same area as this weekly fair value gap, which is nice. So I think eventually we're going to come back, draw up into here, and then trade down. So for the beginning of the week, I just noted all of the important liquidity. So previous week's high, previous week's low here. And I'm really just going to be watching that. That's really just what I've been doing for S&P, is kind of keeping track of all of the ends type of trades where price either raids a session high, session low, previous day high or low, and weekly high or low with the SMT, and then we have a significant displacement away from it. And then I'll take that demo trade and then I'll note it. But yeah, that's my my thoughts for this week. We'll end up see what happens.